Eyes or the dows.
What's going on, everybody? We are live here at Sang Lucci TV. We have a special guest here today. His name is Garrett Cook. He works at the Benzinga floor, which you see behind you. And for those of you who don't know, Benzinga is a financial media publication based out in Detroit. And actually, they got their paws in a lot of other things besides just financial media. So we'll touch on that in a little bit. And of course, we got our boy Kenny from Hit the Bid Radio, man. Kenny, say what's up, man.
What's up? Before we get started, the Detroit game, it was rigged. Sports are fixed. That was the worst non-call. How do you call
Shitty
pass
call,
interference?
Man. Shitty call. Shitty call, man.
No, but it was beyond the shitty call because they made the call and then they got the. Oh wait, that's the one we were paid off on. Oh yeah, no. Take that. Oh no. Pick that. Who
So I literally just picked it up and I saw the screen as 4th and 1. I'm like, what the fuck just happened? What happened? Yo, Garrett, was everybody watching the game at the office over there? I know that.
Yeah. These guys are flipping out. You know, there's a lot of love for Detroit. But personally, being a Buffalo guy, I'm only worried about the Bills. So once they didn't make any sort of playoffs, and I looked at the fool calling for a Super Bowl win, I walked away.
You guys need a quarterback. You guys need so much.
We need a quarterback. We need a coach. You know, we needed all that stuff, and then we finally got a new owner, and I was like, that's what we need to change it. We got the new owner, and then the players all started quitting again. So I don't know. Man.
All right, guys. So listen, Garrett has been sort of in and out of a lot of different trading communities out there. So started out as a trader and is now working sort of in the media industry. Garrett, why don't you give us a little intro on yourself and then, you know, what you're doing with Benzinga as well.
Yeah, definitely. We'll keep it quick so I can focus more on the Benzinga stuff. But I started out in portfolio analysis. I worked as a portfolio manager's assistant at an RIA, managing just over half a billion dollars. We had about $53 million in discretionary. Collapse in 2011 happened. I heard a bunch of grandmothers calling about losing 40%. It was kind of heartbreaking to hear it. At the end of that year, kind of compounding that was we had to do GIPS reporting, so I couldn't find accurate data at the end of the year. Nobody had the same S&P 500 total return number. So once I started realizing that there was market problems and I was going to be taking a fiduciary responsibility to make sure I was getting best execution for my clients, I realized with a data problem that there was something bigger going on. So I kind of spoken about it with the firm. They didn't believe in HFT. I was convinced enough that it was a serious problem, so I stepped down because of the legal responsibilities I didn't want to take.
Got you.
And once I discovered the HFT stuff, I started trading on my own. Did a bunch of interviews, with Casey Research, put some stuff on Zero Hedge, did some stuff with you guys, realized that my strategy wasn't going to last.
Right.
So once that kind of dried up and I struggled for about 9 months trying to generate some income, it just wasn't happening.
Right.
I looked for the next up-and-coming thing, and I just kind of saw the news media landscape changing, found Benzinga, again through you guys, when we were all kind of together.
Yep, definitely.
And I came here, man. Now I'm just kind of leveraging my contacts, helping traders make money off the information instead of trying to make it myself.
Yeah. Shout out to Kyle Bazzi over there at Benzinga. We work closely with him as well. So, Kenny, I want to bring you in this, man. I mean, we have a lot of beef. I shouldn't say beef, but we all use financial media differently here. I mean, how do you use financial media right now? I mean, what is your beef with it? And who do you respect in the game? Let's talk about that first. I want to know who you respect in the financial media game here.
All right. Well, what's up? I don't want to say anything bad about Benzinga. I'm friends with all those guys, but we'll get to that. But remember briefing when I was
briefing. I remember briefing.
It was the only thing that existed, and if you needed some information, you had briefing right next. It was like that. You had just scroll, and that was it. That was financial reporting, and you had your CNBC. We always laughed about CNBC. They were just a bunch of cheerleaders. But there were some guys that swore by just trading on what they heard on television. And, it could work if you're that quick. You hear something and you hit it, and then you're offering it out to the other idiot who just didn't get it quick enough, and you're selling it to him. But I have become almost like there was a company, I think, Trade the News. So I wanted to make one called Fade the News. Because the guy that's getting the information, he's got it before you. Guess what? And you know what? Somebody got it before him. And then somebody got before him. And then you're thinking, hey, look at I got something on the news ticker here. Let me go buy that stock. Are you nuts? You're the 9th guy already.
Right.
Why would you want to do this?
Right.
So, again, when it comes down, I've gone back to what has made me money It's just price action and price action alone. And when I hear people are buying something on some news, I'm waiting for the reversion to the mean, and I'm just going to fade that news.
Right, right. So let me flip that back to Garrett over here. I mean, how do you feel like breaking news right now is sort of front run? I mean, how do you feel about the front running with breaking news? I mean, do you guys actively try to break news with the Benzinga Pro model? I mean, how successful are you? How quick is it? All that kind of stuff. I mean, what do you think about all that?
Well, I can definitely be frank with you guys. The breaking news game, it's not going to be lasting much longer.
It can't.
Anybody can do something timely. Anybody can grab something from an original source and rehash it and spit it out to you. It's the major thing we go for at Benzinga is context. The benefit that our users at least get is we do get the information to you the quickest, but we give you the context in the easiest manner. So if we break a news item, you know, through our platform or whatever, you'll click it, you can go in there and you can see, you know, the progression of what led to maybe that news item, whether there was a halt and then the news came out, whether it's been a disintegration in earnings and then, you know, the earnings number came out, or it's been a company that's consistently beat guidance and then now a news item's coming out that they're no longer issuing guidance because they just always issue so low that they smoke the street.
Right.
So there's context to it. We're never looking to have you read something, click a button, make money, and do this every day, every minute, because it's unrealistic. What we're looking to do is to give you information to either act on it right then or to wait for an opportunity to act on it. And like I said, it's context. It's a lot more context than it is timeliness. I mean, we're competing against guys that are analyzing crap on microseconds. I mean, what am I going to do? Am I really going to put something out there quicker in a microsecond than your computer is going to grab it, post it?
Right.
Let's be real.
One thing I liked about Benzinga when you guys first got started is that you actually, you know, if something was happening on a news story, you'd actually give an idea of what to trade along with that. And nobody was doing that. I don't even know if you do that anymore, but that was pretty cool that you're like, you know, something was happening on FEYE, and then you would say, if you're interested, the 3250 calls are trading at, you might want to look at that. And that was the first thing I noticed about Benzinga. Again, I don't even know, I'll be honest with you, I don't go on any news, I don't use any indicators at all anymore. I don't even know if you do that anymore, but that was cool.
They did. Cool. They did. They always had the snippet at the end where they had sort of an actionable trade idea, you know, on the backs. And now I think other financial publications are starting to pick that up as well.
Right.
We'll go into that in a second. And actually, I mean, might as well throw it out there right now. I mean, what do you think? And this is both to you, Kenny, and Garrett. We'll go with Garrett first. What do you think about the partial activity or the sort of hidden agenda activity with financial publications? Let's say the biggest one being Market Watch. You know, Market Watch often, you know, tries to throw the sort of gloom and doom kind of things out there. What do you think about the sort of agenda-based financial publication kind of thing?
It's tough. It's tough for me to say what the motives are these places are because I haven't been there. But as somebody from the outside who comes, you know, from the zero hedge mob with the complete speculation of just anything that somebody's promoting, is most of these big established outlets have steady income revenue sources that they depend on. You know, they need to please their advertisers. Maybe every post isn't geared towards their advertisers.
Right.
But I believe that the people that exist in that kind of established media world kind of live within this bubble of there's an appropriate way to act. And that the way you act matters more than the information you're sharing or the impact you're having on a society or just a community. And so here, there's certain things we can and can't say. You know, like you can't just go smashing your partners. But if your partners are doing something that's unethical to your players, you can kind of work around that and maybe say, you know, there's this order flow situation with, you know, these trading platforms.
Right.
We're not going to call everybody out, but they're all doing it, so you should consider this. And most of these other media outlets just kind of seem to be rehashing information as opposed to trying to add their own spin to it. Because again, they're journalists, they're not traders. I don't think they have that skeptical mind. These are, from my understanding, people that just got into a culture. You know, they did good in school. They kind of played into this whole level of, you know, let's just do things right and, you know, things will be good.
Right.
Whereas most of us are more willing to kind of challenge things in order to make you make a better decision. I would never want somebody to read my piece and just follow it because I wrote it. I would want somebody to read my piece because I gave them information that allowed them to go through and analyze it themselves and figure it out. So the agenda, it's an ego thing. You know, maybe it's just because I don't really have much of an ego. I like to run my mouth, but, you know, I know I'm not the shit. And, you know, I don't like the motive behind it. But it seems like Kenny's got a great view on news media with motive, so I'd like to hear his rant.
Yeah, Kenny, what do you think about the motives here behind? I mean, we as traders here, we don't really mess with this stuff anymore. I mean, we hate CNBC. As traders, we hate CNBC. Why? Because we have to watch the same shitty commercials. Do you rent from National? Do you, are you going to trade with Scottrade because of the stupid helicopter thing? And then the way they report market moves that are happening right now, that's where they fail for me. I don't know about you, Kenny. What do you think?
I hope Kenny's not going to try to sell us an options book for $2.99 or $29.95.
As long as you're the first 250, as long as you're the first 250 people, yeah. I called Pete. I was like, did I make it? Did I make it? You've been running the commercial for 2 years. Am I still in the 250? And do I have to pay shipping and handling, which pays for the book anyway, or can you just send me the book for nothing?
But the book's free if you pay $30.
Exactly.
Yeah. But it's funny about CNBC because I've been doing this forever. We had it on just because as a new trading firm, we thought it'd be cool to have TVs everywhere with CNBC running. And we never watched it. We heard CNBC.
It was just
that same commercial over and over again. I forgot what.
If you were south of Houston in New York City, if you're anywhere south of Houston in New York City, it doesn't matter what bagel place you walk into. Like CNBC is on the fucking TV. It's on the TV.
It has to be there. And the more TVs you had, the better, the more prestigious your firm was, I guess.
Yes.
But I would hear those commercials, and every once in a while I'd look up. I'm like, oh, it's a car service commercial. Is that what that was for the last 6 months? Because I never looked up. I just would hear this noise in the background.
Right.
But with MarketWatch.com, MarketWatch.com is my favorite indicator because until they stop, if you notice, at least one out of their top 5 articles is "Today is the end of the world."
At least one.
The reason you should be scared today. And until they stop running those, I will believe the market will go up. It's when those people stop saying that is when I'll be afraid, because the world's coming to an end every freaking week.
Okay. So check it out. As traders, and this goes back to you, Garrett. I mean, let me hear what you think about this. As traders, we use financial media not for the actual content in there. We use it as a herd indicator. It's like, okay, how are these guys reporting X, Y, and Z that is happening now? How are these guys reporting the recent bull run? How are these guys reporting, the sell-off that's happening right now? Are they saying doom and gloom? Everybody's just throwing in the towel, and then all of a sudden you see the spike back to all-time highs. Like, how are they influencing sentiment? And that kind of goes back to me believing there is a super hidden agenda behind pushing that sentiment. And I have this big conspiracy theory, of course, and me and Kenny are big on these conspiracies, in that some of these publications, it's actually kind of like a pump and dump in the sense that, a penny stock pump and dump, in the sense that the publication is receiving some direct or indirect benefit from pushing that sentiment. And again, there's no way to prove this. There's no way to freaking prove this, but I really wish I could. I really wish I could.
When I wrote that piece, when I worked with Tyler, when we did that bit on the structured notes tied to oil like 3 weeks ago, that was one of the things that I was telling people. I was saying I can't show you stuff that proves that this is the scenario that's taking place. But if you're in the industry and you understand a trader's perspective and why they do what they do,
right,
then I can prove to you what happened in that space.
Exactly.
So, as much as we can't prove what CNBC is doing, when you're here and you hear this drivel all day, every day, you know what they're trying to do. And one of my biggest arguments, which I'm starting to question now because they keep rerunning this shit every day, is that everybody's standard of living has increased because gas is down, 50%.
Yes.
And from people that I've spoken with, it's not so much that anybody's saving money, it's that they're just maybe buying an extra pack of cigarettes at the store. But CNBC is going to continue to drive this fact because what would their motive be? Let alone where would they have the time to actually sit down and do this analysis? You got to figure these anchors, they're stressed enough. I mean, that's tough getting on TV all day, doing this every day, whether you're sick, whether a family member died, you're out there, you're on TV, you got to play into it because if you slip once, people are going to chew you out. So you can't expect the anchors to do any real research. So what do? They're going to hire some people in the back end. They're going to hire some 25-year-old kids, some 22-year-old Magnum cum laude that knows all about Gordon growth, and he's going to run his little models, and he's going to have bad assumptions because he doesn't have the conviction to say, the Fed's going to do this with interest rates. They're not going to listen to Jim Grant. They're going to go out and listen to Joe Livorno because
Right.
Joe Lavore is on CNBC all day. Even though a hedgehog or groundhog's right more than he is, people still listen to this guy. So
Indeed.
there's definitely a motive and a culture, but I think that it kind of has bred itself because it gets easier for them to do their jobs. Nobody likes to stress every day. We all want to have an easy job. So I think once they kind of find their groove, they go with it. And usually it takes a little effort to make yourself the best. It's kind of easy to just quit and become mediocre. So I see that being the issue there.
All right, so a couple more things. I want to get some two more things in particular. Where do we think financial media is going? I mean, where do we think from the user standpoint the consumption of financial media is going? Is it going to be the sort of Business Insider, by the way? I mean, they really exploded within the past 3 years just by the way they put out the content, the way that a user interacts with that content. And then obviously the social aspect to that content as well. It's very clickable content, and it started off just straight finance, and now it's literally freaking everything. So where is it going, man? Where is it going? Where do you feel it's going? And how does let's say a financial group like you guys yourself, Benzinga, push to the upper echelons of this sort of industry?
Well, I think first for us, one of the major things is that we seek respect, not attention. Attention is kind of a fleeting thing. So even though you may not get the ramp up in revenue or the feeling that you're the shit when you go for respect over attention, it tends to last longer. So at BI, I click their stuff too. It's very clickbaitable, and that goes back to Kevin Ryan's relationship, who I think runs DoubleClick. His relationship with Henry Blodgett and their whole ordeal to get this whole clickbait thing going. And so they had no problem, excuse my wording here, but they had no problem kind of whoring themselves out to everybody in order to get $1.
Right.
The way that I see it going, though, is I don't like BI as a proxy to society because they're making stuff that people are clicking. And
that's literally all it is.
Into society.
That's true, man. That's true. Like, Kenny, do you use BI at all? Do you go on BI at all? And when you do, how do you interact with BI?
I don't really go on it too much, except when somebody sends me that's something that's comical. That was what I found.
Right.
The cluster stock, right? Is that part of BI, or is that something separate, or is that their catchphrase? Cluster stock?
No, it was cluster stock was its own vertical, I think, and then it just got delved into the whole finance vertical.
All right, because they used to post some of my videos on there, and I was friends with a couple of girls that were working there, and we they would commingle at the CNBC parties and whatnot, and it was one of the websites that I actually found myself reading because it was like the Onion of finance to me.
Right.
It didn't seem like it was real.
Dude, when they were just starting to get going, every time, and Garrett knows this, like on Twitter, I'd be like, yo, this is the TMZ of fucking finance right here.
Yeah.
All this shit is, and they'll get you in there and click 19, 20 times. They'll get you to stay in there, and then that's it. That's how they bring about that particular culture. But just like Garrett said, Garrett or Benzinga, or certain other types of financial media is more about the content versus let's get the clicks, let's get this, let's get that. So that brings me to the next thing. It's like, how do traders know who to trust, man? How do you answer that question, Garrett? How do we as traders, my community and all these other trading communities out there, how do we know who to trust?
That's a loaded question. My experience, again, the fact that I come with the zero hedge mod background with everybody who kind of questions everything, it's more of a soft sell. I think a lot of traders are using Twitter as an avenue to kind of check people. I've discovered this new site called Vetter, VETR, that will actually allow you to pick stock picks and stuff. It's a place where you will not find a hedge. I swear to God, you will not find Keith McCullough going here because he can't bullshit you into his calls. He will not get stuff. But it's sites like this where you can kind of vet people because going back to what we were saying about financial media earlier, I don't think it's so much like you're going to just trust Benzinga for everything and anything. You're not just going to trust Bloomberg for anything and everything, but you're going to niche. You're going to pick. You're going to go to Lucci for your options.
Right.
You're going to come to Garrett for your macro stuff. You're going to go to Bloomberg for your digital imaging media. And it's kind of that whole buildup. So what makes it so tough is a lot of these people, we have when I first got here, one of my major things was I feel disconnected with the street now because I couldn't get on Twitter as much. I couldn't talk with people. This is my connection to the street. This is my street corner, is Twitter.
Right.
So by using this, I can kind of feel what you guys are looking for. I can do a sentiment on Twitter, find out what's important to you, and then pander to it.
Right.
But not just because I want to get your clicks, but because I want your respect. I want you to listen when I say something. So it's just kind of I'm trying to think of how I want to phrase it and how I want to put this exactly.
Kenny,
go to Kenny so I can think it through, because I don't want to say
how.
Kenny, what would make you? What'd you say, Kenny?
No, the way you find who you're trusting, and what I've always wanted to do. If you've watched some of my videos, guys, if you want to watch some, I wore the wig because I knew we were going to be talking about financial media and people on TV, and I used to do this bit that analysts know nothing. Again, with conspiracies, if you've been in the market long enough, you've seen enough upgrades.
Absolutely.
And the stock's down that day, or
absolutely.
More to the point, before we had level 2s that just showed ARCA and Inca and BATS and EdgeX, you actually saw the market makers on the box.
Right.
Goldman Sachs, Morgan Stanley, Merrill Lynch. You saw the people out there. So you'd see an upgrade by Morgan Stanley on XYZ, and the guy's on the offer all day, selling into the strength that he created with an upgrade. So I would call Morgan Stanley. Yeah, hi. I'm a concerned investor with a level 2 in my house. I appreciate your buy recommendation on the stock, but I noticed you're on the offer all day. So are you selling into the artificial strength that you created to get your client out of the stock?
Did you ever get an answer for that? Did you ever get an answer for that? I doubt you did.
I knew exactly what he would say. I was like, what? He's gonna say every client has different needs. Well, sir, every client's got different needs. We have somebody that wants to take advantage of this update to lighten up on his position. I'm like, no, that was your whole intention. Don't fucking bullshit me. That's your whole plan.
Yep.
See, now that's I think that's part of the problem that financial media is going to have going forward. Is now with the advent of the internet, we can do anybody can do their own research. It's just on the person to get the right content or the wrong content. But if I'm not going to sell Kenny my service because he knows how to find his stuff.
Right.
If he wants my service, it's because he wants to know what everybody else on Wall Street is going to be looking at, or maybe what is important. But it's going to be hard to make yourself a platform that takes up somebody's desk space that is constantly being looked at.
Right. So
the point. I'm sorry. The point that I was making about the analysts is that you need to put these guys to the test. So if you know this analyst who makes an upgrade every time within a couple of days, the stock's fading and going back to where it came from, he starts to lose his credibility. And I know there's websites out there, I'm sure, like Rate This Analyst or Vet the Analyst, and you'll start to realize that, okay, this is somebody we can't trust. It's going to be just a learning experience, just like trading, just like any of this stuff. Learning how to do anything in finance. The best way to do it is to learn and to remember who did you wrong and who did you right. It's not like being a stockbroker, but like you're only as good as your last pick. But once you realize that these guys, they serve you no purpose. They're serving no purpose only unto themselves. Right. And if you watch my analyst video, I said you'll like my stock pick if it does well by you. If you're the guy that I'm helping out, then you love me. But if you're buying a stock because an analyst said to buy it that day, you're just setting yourself up for disaster.
So, Kenny, let me ask you, what would a financial publication, what would a media outlet like, let's say MarketWatch or even Benzinga, or let's say a new group, like what would they need to do to win you back? What would they need to do to win you back, a trader back who is, let's say, pretty much expunged himself from the financial media industry completely? What would they need to do to bring you back? What would bring you back to reading some, financial news all the time? Is it just satire for you?
I love satire, but I like to cut out the over hype and the doom and gloom. Just get it in the middle. Tell me.
Get it in the middle. All right. No doubt. Tell
me what's happening, and then also, if analysts want to go on there, show me just a little bit of a track record. Like Joe Schmo loves ISIS today. Right. Joe Schmo's last 9 picks all suck balls. Oh, okay. So now I know not to, care about what Joe's talking about. He just got lucky today with his pick. So
okay.
Just more transparency, because analysts are the people that there's no repercussions, they have no consequences, and we just let them get away with it.
So back to Garrett then, how about a sort of ranking system for every piece of content that comes out in financial media, right? What if the new place that financial media goes is this sort of aggregation thing where things are ranked by the user, And that's how people consume financial media now versus just going through the one comment, one opinion type approach and that kind of thing. What do you think about that?
Well, the aggregate, I could totally see that happening. The only problem is then that's being set by the sentiment. You know, like you can go on Reddit and you can enjoy some of what's on the front page, but you might go on one day and be like, well, the community's just putting a bunch of garbage on the front page. You know, it's all kittens. Like, this is nonsense. What am I going to do with this? So I could see media being that, but again, it just comes back to I think everybody's teaching themselves. I don't think you need me to tell you what to think.
Right.
I think because of my position and because of your position, you know, if you're a carpenter and I'm a finance guy, it's going to be a little easier for me to structure a loan for you, and it's going to be easier for you to build me a wooden cabinet than it is, you know, vice versa. So I think being here as somebody in the news source and surrounded by this all day, not being preoccupied with having to trade mushy order books and the price levels, offers me the opportunity to give you information to act on while you're doing your craft. But as soon as I screw up, you're going to remember it, man. So it's like, you know, you try not to stick your neck up, but when you do, you got to own up to it. Nobody's perfect. And
no doubt.
I had the oil color wrong, so you got to put it out there.
You know what? And on that, like, are people that work at financial publications or online whatever, do they trade as well? I mean, are the cats at Benzinga all trading too? Are they not allowed to do this shit? I mean, are they in the market?
No, we are not allowed to. It was that was a bunch of shit people gave us for the BlackBerry thing, as they thought we were pumping and dumping BlackBerry and trading it. Nobody here is trading it. If you were to audit the operation, you would find out that nobody who's posting anything is doing any sort of trading at any moment in time. There are traders in the office on the other side of the office, completely removed from the news desk, not trading anything that we talk about there.
So with the old Chinese wall, as they say.
Yeah. Well, there's no wall. It's like the Chinese distance. But we're not selling things. We don't have a desk that's moving our own money. These are guys that are trading their own capital that step away from the desk when we're breaking news, and they're not trading anything. And we can't. I mean, it's an ethics thing. You can get away with it, but you know they come after the little guys, man. You know, if we were trading $500 million and making money and giving kickbacks to the SEC on fines, they wouldn't give us any problems like that. So, but no, we're not doing that.
All right, guys.
Sang Lucci.
Yeah.
Back to your point before, you like what works, what we collectively try to do. You know, my original website, Suck My NASDAQ, and you know,
that's a great ad.
And you know, Benzinga, and what we try to do is in forming that community. We get that community to where we all kind of know what we're doing, and in that community, everybody has their little, you know, way of finding some information. Right. And then it kind of gets aggregated into the community, and you know, like I know my buddy Rob. I don't know where he gets his information from. I think he subscribes to every news service there is. Right. But when he brings me something, I know he's already done his homework after aggregating all of his information. When he tells me, I got a guy like that too, and I'll tell somebody else. Yep. So it's through the community and the dissemination and that process where, you know, when people come to hit the bid, they know that if I'm saying something, it's from some really decent source. Now, we're not talking inside information, but we're talking about people's desire to know why. And again, that is a very big desire. People want to know, why is this happening? Why is the stock moving? Why is it doing this? If you're an active trader, and I used to be the why guy. Before I put a trade on, I wanted to know why. Right. I don't give a shit about why now. Like the other day, Lynn Energy was gapping down because they were cutting the dividend. Next thing you know, it's ripping. I'm buying it because it's ripping higher, breaking VWAP and going green. Then I'll find out, oh, they just got financed by some blah, blah, blah. Absolutely. Fantastic. By the time I read the story, I'm already out of the stock.
Right, and I think Gary can attest to this. I mean, as a trader, I know you once were, you know, you hit a certain point where you realize full-fledged that there's nothing the news is going to help you out with your trading. There was before when maybe you could get better access or quicker access to it, but since that trade idea is long gone through HFT and all that, like, that shit is done, you know? That shit is done. So there's no use, really, for quickness, speed, and all that kind of stuff for news as far as active trader goes, you know? I mean, it's just pure price action. at the end of the day. But how much does financial media need to talk about it? You know what I mean? Like, should Market Watch or should Benzinga even be talking about active trader kind of things? And Garrett, I'll leave you with that one, and then we'll close up here for the day.
Well, that's a tough one. First of all, you guys are telling me that you're not doing real-time signal alerts from an equities hedge fund trader with a paper account. You guys are actually looking at real data. What the hell's wrong with you? You guys got to get onto the hedge eye mailer list, man. This guy's 0 for 10. He'll make you lose money quicker than anybody.
Oh man.
Now,
I don't even follow this guy. I don't follow this guy at all. But I see you picking. I see you picking battles with Homeboy all the time, man. This shit is hilarious.
It irks me. It irks me because that's somebody who's misleading people. This is a guy who comes out that worked at 2 hedge funds for a collective 18 months. Both of them blew up. He's a hedge fund trader trading equities. Name me one hedge fund trader that's trading blind equities on signals, not accounting for dividends, not accounting for stock splits, not accounting for taxes, not accounting for commissions. All of this is listed in their ADV. It's nonsense, and that's part of. We were talking about CNBC earlier really quick, and that's kind of what I like about CNBC and Hedge Eye and Business Insider is they piss me off enough that it fires me up to dig a little deeper and go, this is why my information is better than yours. It gives me that extra boost to go a little further to kick their ass just a little bit more. But as far as the way finance is going to play in, the question was, again, how finance is going to play into the active trader, right?
Right.
I don't think it's so much about speed anymore because HFT's already narrowed that down to the nanosecond, prediction tick.
Right.
I think the next move now, which is something I've always kind of been appealed with since I got into the whole HFT thing, was context. HFT is going to bid up a market because they're betting on the probability of the next tick.
Next tick, absolutely.
What's the context of that whole move? So when something definitive comes out that they can actually put context to in like a news article,
right?
Or it's not just one news article out of Italy, it's the same article being republished around the entire globe.
Right.
Then all of a sudden they take action. And that's part of the problem is I think with humans you have a sense of euphoria where you tend to spend money without thinking about it. And then when markets are crashing, you get a lot more analytical with how you're spending your cash. What are you buying? What are you selling? Right. Where computers are just trading probability. So I think our advantage going forward, if we're going to do anything, is to play into these automated guys that need context above and beyond the speed that they've already built.
Okay.
And already have. So.
One more thing that I wanted to throw out here, and this was just something that irked me when it happened. Do you remember Mohammed Islam, the 17-year-old prodigy bullshit-ass trader? Do you remember this, right?
Yeah, the lunch money kid. I remember your article.
Okay, so New York Post posted it. Like, New York Post was the first one to get it, and then every other publication out there, didn't matter if it was finance or whatever, picked up the story and ran with it completely. So where is the line in the sand that says, hey, what the fuck is going on with this article right here? Should we post it here? And how much of that do you feel like happens in the industry? And make some comments on that side of things.
Well, everybody's clickbaiting. I mean, that's part of the problem is we didn't want to post anything to do with that because what are you going to do off of that? So I tell you, some guy made $70 million trading lunch money. What are you going to do with that information? You're going to get a little excited, maybe make a bad decision because dopamine's kicking off in your brain. Aside from that, what are you going to do with that? Nothing.
Absolutely nothing. Absolutely nothing.
And that plays into the whole these guys are seeking attention. It's a sensational story.
Kenny,
they don't give a shit about you. They want your clicks. Go, Kenny. Go ahead, man.
I'll tell you what my mom was doing with that information.
All right.
She forwarded the story to me. She's like, how come you can't be like this guy?
Yo, man, I have so many people asking me and emailing me and texting me.
I said, Mom, look at that picture. This dude's not even a real person. What is that? That was the first thing I noticed. I didn't even know what the story was. I'm like, what is this picture? It looked like a fake person or a fake picture. I was like, whatever this is about, it's not real, Mom.
Right.
And then I heard the number. I was like, that means he's making 600% an hour for the last 600 days in a row. I mean, come on. I started with a $5,000 account. I'm up $70 million now. Come on.
On lunchtime. And that was probably just to bring in some of that money from the sidelines that CNBC always likes to plug in order to get people trading, in order to play on
the sidelines, buddy.
Yeah, I know. That's why they're going to keep reminding us to buy their book on how to trade the options so that they can come in and generate all that order flow for the options monster guys, for the other brokerages that promote there. Sorry, Lucci.
So Garrett, how does that clickbaiting shit stop? I mean, is that ever going to stop? I mean, are these publications ever going to sit there and be like, yo, what are we pushing out here? Like, why are we pushing this stuff out here? Or do do they not care? And it would make more sense if they don't even care, because it's all about the clicks anyway. So it doesn't even matter if the story is relevant or true. Who fucking cares? Push it out there, you get the clicks.
Well, why are they going to care what Joe drive-by Joe Schmo's reading if he's not paying them?
Right.
That's the difference. Is here we're trying to put ourselves into a box so that it doesn't fall into that. So it's always on trade ideas. One thing we're always trying to do is improve our headlines to make you want to click, not to entice you, but to get your attention. And then when we have your attention, make sure that we keep your respect by giving you good information after we've gotten your attention. Because if you have a good idea, you're going to spend your whole life jamming it down somebody's throat because nobody wants to accept it.
Right.
So what we try to do is come out and make sure that we stay within the box of, is it a trading idea? If you're making $72 million on lunch, great. That's not a trading idea. You can't do anything with that information. Okay, great story. We're not posting it.
So you have
don't
your
get those
niche.
clicks. It stinks.
Right.
Yeah.
So you have your niche in the sense that your content is tradable content, or can be tradable content. There's a purpose behind it.
Yes, we want your respect. We don't want your 30-second attention. So you can accidentally click a banner ad and give me a half a penny.
No doubt. All right, man. Kenny, last words here before we close it up. Garrett's going to end with some promo stuff he's got going on. Kenny, last words, man.
Last words is, the financial media and meeting with the social media. I find it, and again, I don't want to make it sound like I'm down on Benzinga, because this is one of the only 3 websites that I do look at for information. I still like MarketWatch.com. I still go to Yahoo Finance because that was what I was.
Yeah, but you're old school, bro. You an old motherfucker too, man.
Yeah.
Yahoo Finance till you die, man.
Yahoo Finance, MarketWatch.com, and then it's Benzinga. But we were talking about why that stuff doesn't work. One of the first times I heard about gray boxes and black boxes and silver boxes and your mom's box and keyword alerts and high frequency trading and all that stuff. The guy that was building it, he was building his algo based on keywords that were being sent across all these news
algorithms. Yeah, absolutely.
And then it would just trade on those keywords. So I was like, so he's getting that information before me. The guy that's typing it in is getting the information. Then there's the real information. I swear to God, what am I, 50th to the information, and I got the algos trading in front of me too?
Right.
Why am I even reading this stuff?
Right. No doubt.
So I mean, that was when he told me he was building an algo based on keywords that was just doing it automatically. I was like, I've got no shot to trade on news now because it's like I'm 9th in line already. So, again, 2015 right now, but I wouldn't even get to it. Next time we talk, I want to talk about the illusion of percentage gains, because I was talking about everybody who's telling me how well they did in their account. They were up this amount %. I'm like, if you've got $15 in your account, it's pretty easy to be up 200%. No?
Okay, we'll do that. We'll do that one later. All right.
Yeah.
All right, no doubt. So shout out to Benzinga, man. We love Garrett. We love Kyle, Jason, everybody over there at Benzinga. Garrett, you have something you want to end this with, right?
Yeah. Well, Lucci kind of got me out of left field here, so I was trying to pull together something for the listeners out there. I don't know if it's up yet, but it will be first thing in the morning. For anybody who's listening to the show, if you guys want to try out our Benzinga platform, our subscription service outside of our web service, you can just go on to benzingapro.com, sign up, use the name Benzinga SL, and you can get 2 weeks for free, and then if you choose to stay with us, we'll give you 50% off on the first month.
Okay.
And that's going to be Mach 4 access, so you'll have our squawk, you can access the desk, see everything we've got to offer, and it's only for your listeners.
Very cool.
Until the end of tomorrow.
Very cool. So again, guys, just for the Sang Lucci crew, benzingapro.com, right? And then use the name Benzinga SL, correct?
That's correct.
All right, cool. I'll get that information from you and then post it on some stuff, on an article on the website too.
It's going to be pro.benzinga.com.
Pro.benzinga.com, guys. All right, and your username here, Benzinga SL. All right, guys. Thanks, everybody, for joining us. And, Garrett, can we get you back on the show soon, man?
Of course you can, man. Hit me up whenever you want, buddy. I'm around. Right. I do this stuff all day, every day.
Kenny, nice wig. I'll see you later, bro.
Good chat, Kenny.
I had a beer. I pour it out to the Detroit Lions fans. I know you guys. I mean, I'm a Jets fan. I know the misery of being a Detroit Lions fan. I think it actually might be worse. I'm not sure.
There's some abandoned buildings I'm sure we could go burn down and do our part to rebuild.
All right, guys.
Oh, shit. 8 Mile style. 8 Mile style right there.
All right, gentlemen. Thank you. I appreciate it.
Later, guys.
Later.